It's Way Up with Angela Yee. I'm Angela Yee, and I'm here with my Wealth Wednesday partner, Stacey Tisdale.
Happy Wealth Wednesday, everybody. We are closing in on year-end. I think this is episode 48.
Oh, wow.
Of Wealth Wednesday for the year.
Yeah, this show has, we started in February, so that makes sense.
Almost a full year.
Yeah.
Almost.
So we're very excited. So for this very special occasion, we had to have a very special guest, and we have
honored.
George Acheampong.
Thank you so much. Glad to be here. Honored to be here. Thank you guys for having me.
And he got us smelling good with his Equity by Melanin Money unisex fragrance.
Unisex fragrance.
Yes.
So for the guys and the girls.
George is going to teach us a lot about investing and making money, but we have established that if you're going to ask people for money, you got to smell good.
Right.
So we'll get to that
Absolutely.
for sure.
Absolutely.
But you are a big deal. You're the co-founder of Melanin Money.
Mm-hmm.
And Melanin Money has an incredible mission, which you're going to tell us all about. You're also the founder of Capitalize,
Mm-hmm.
which is a financial advisory and investment firm. But you were named by Forbes as Financial Advisors to Watch in 2023. You have all sorts of stuff going on, and I know you just had the first annual Melanin Money Award.
Yes. Exciting stuff. So we just had it. It was great. Our overall mission as a company is to help 100,000 people of color achieve their first $1 million in net worth, so we can decrease the wealth gap by $100 billion.
Wow.
How long that's going to take us, I don't know, 10, 15 years, but we're committed to the mission.
Right.
And so we had the purpose of the award show is to, I feel like a lot of people haven't gotten celebrated since they left high school, right? Or unless they went to college. And so when you make that contribution to your Roth IRA, nothing happens. No one claps for you, right? So I think if we want to see more people build wealth, we need to incentivize them. We need to celebrate them. And so every year we're going to be showcasing the milestones. So this year we announced that our community has already collectively accumulated over $60 million in new net worth just this year alone. So we're excited.
That's amazing. I want to ask you this as we're thinking about the future as a financial advisor, because I tell people all the time, that you need to get with the financial advisor. My friends will ask me, I'm like, you need a financial advisor. I don't want to. But one thing I want to ask you about is people are talking about 2024. And so do we look at this now as a time of great opportunity? How do we know what's going to happen? There's a lot of people who are really frantic with concern about, will I be able to afford, or is this the perfect time? Is there going to be a crash? Is it a depression? And I know nobody knows 100% the answer, but what do you feel like, based on numbers and predictions, what do you see 2024 as an opportunity for?
Yeah, I think first and foremost, everybody needs to do an audit of what they're doing currently, right? Because I feel like you can't determine where you want to go if you don't know where you are. And so once you do an audit, kind of look at your spending, your track record, what you've done, that's going to let you know what available assets or cash flow you have to take advantage of opportunities, right? What I think we are going to see housing prices actually probably go up a little bit in 2024 because we expect rates to go down. And so that's going to increase the demand. In terms of people wanting to get back into the housing market.
And there's a lot of people wanting to buy and not enough inventory right now.
Not enough inventory, right? So that's gonna further exacerbate the demand issue, which I think is gonna drive prices up. But what we can find is that if you have the opportunity before rates continue to go down, is to go ahead and buy, even if it seems like, man, this is a little bit more expensive than I normally would get. It's only going to go up, right? So as long as it's within your budget, right? Now, I'm not telling you to buy something that's out of your budget, but as long as it's within the realm of your budget, even if it's slightly close to the top, I would still advise, if getting a house is something that you want to do, to go ahead and do that.
It'll be too competitive.
It'll be way too competitive. Rates are going to go down. Housing prices are going to go up. Supply is already still low. But at the same token, when you do that audit, if your numbers tell you that regardless of what the rates are doing, regardless of what the market is doing right now, maybe buying a house at this moment isn't for me, you just have to base it off of where you are, right? As far as there being a crash, the stock market and the markets in general, I would say by and large are rigged to stay up, right? So it's like, I think that you can't win the game if you're not in the game, right? So can we predict if somebody makes an investment in the stock market or real estate at the top of the year, if the market is going to crash? Everybody thought that in 2023, right? And one of my portfolios is up almost 70% on the long term. So it's like, why would I not be in the game, especially if I know I'm going to be there for an extended period of time? You might see ebbs and flows in 2020, 2024, but if you plan to own for the foreseeable future, I recommend staying in the game.
Something that we had talked about is it's really exciting how many more blacks and people in our community are into wealth building and stock market investing. It's a little different for us because a lot of those people are first generation wealth. They've a lot of them are new to investing, so they've never seen a down market before. And just to back up and give everybody a little bit of economics 101, I got really frustrated last year when I was hearing everybody talk about there's going to be a recession, there's going to be a this, there's going to be that, when we weren't even, if people had the track record and had been in the markets for decades and seen that was just not happening.
Right.
And we, as a country, we've gotten used to really cheap money. Over the past
For
couple
a very
years,
long time,
and we just had this little blip, and it's getting cheap again. So how do you? A lot of what you and Angela were touching on is that whole stock market's out here. A lot of us seem to think we need to be rich and have those assets to have a financial advisor. How do you work around that?
Well, it's almost like this: if you were learning how to drive, right, or excuse me, if somebody's going to gift you a Mercedes, right? Would you want to learn how to drive the car before you got it or after you got it? You probably want to learn how to drive before you got it, right? So it's the same thing. People are like, well, I'll wait till I get money before I learn how to invest. That doesn't make any sense, right? Because you want to understand the fundamentals and also have to understand that you are who you are. So if you're not a good steward over $100, you're not going to be a good steward over 1,000. You're not going to be a good steward over 100. Money is just an amplifier, right? And so people need to get a plan in place so that when the money starts to come, they actually know what to do with it. I think one of the biggest issues we see is there are some people who get windfalls of money. And the reason why it's just sitting in the bank because they don't know what to do with it. And I feel like that's almost just as bad as not having it at all, right? You actually have the opportunity to do something with it, but you're on the sidelines because you don't know what to do, right? So I think that regardless of where you are in your journey, because it doesn't have to be, some advisors, have minimums of you can only work with them if they have $250,000, but there's plenty of advisors and plenty of educational ecosystems that you can tap into to be able to get some type of plan in place, because you want to have that plan established before the money comes or as you're getting started so that you can establish that foundation.
For people who are looking for a financial advisor, what are some things that they should look for as they're doing their research? That's
a great question. Now, one that's not asked enough, quite frankly. Number one, are they a fiduciary? And all that means is, do they have a legal obligation to do what's in your best interest, right? So that's what I am. You can Google me. You can look me up. Like, I have to do what's in my client's best interest, because some advisors operate from a suitability clause, meaning like, well, you had your money in the bank account that was earning 0.01 interest, and now it's in a CD and it's earning 2%. So technically that puts you in a better situation than it was before, but not the best outcome, right?
Okay.
So asking, are they a fiduciary is the first thing. And you can verify this. You can look their name up on the SEC website and all that kind of stuff. Number two, you want to ask them situational based questions to see how they respond, right? If they give you cookie cutter answers like, oh, just only invest in S&P 500, when you know that you've seen other ways to invest and get higher yields, it's like, okay, well, I understand that that's something that I could do if I didn't have an advisor, but what would you do as my advisor? If they can't give you an answer beyond what you can Google, then that lets you know that they're probably not going, either they don't know what they're talking about or they're going to just put you in a cookie cutter solution. Exactly. Right. And so those are the top two questions, is being able to ask them like situational specific questions about what would they do in this scenario, and then finding out if they're actually a fiduciary, which means they have a legal obligation to do what's in your best interest.
Let's say somebody's goal is to buy their first house, since we were just talking about real estate.
Yep.
What are some things that you would tell them to do to get ready for that?
That's a great question. The first thing I would do is I would make sure that you have done an evaluation of your credit, because naturally you're probably not going to buy the house cash, right? So unless you got it like that.
It depends on where, right?
Yeah, or it depends on where, right?
People are buying houses with cash.
Like, I guess like in the Midwest, places like that, yeah. But if you aren't buying the house cash, then you probably want to make sure that your credit is in a decent place, right? Then you want to make sure that you know your own personal debt to income ratio, because the bank will tell you like you can afford this. But when you think about the expenses and other things that you're responsible for, you want to predetermine how much house you feel comfortable.
That's how a lot of people got in trouble. And with housing, just a good rule of thumb is you should never spend more than 30%
exactly what I was going to say.
of your after
100%.
tax income on any housing expenses.
Yeah, because they'll tell you, the bank will tell you, that you can afford more, but it might not make sense for you, right?
Yeah.
So making sure that you predetermine what your ideal debt to income ratio is. And then also think about the other things, right? Like, you're probably going to get some new furniture. So like factor in the full budget of like, what is it that I need to do? Because some people feel like, it's just the house. No, it's not the house.
There's a whole lot of things.
It's the cost of ownership, right? So just really do that analysis, do that budget to figure out like what makes sense for you, to make sure that you understand that you don't get too much house. And now it's like, I can't do anything and I can't travel, like we talked about offline, because I don't have any extra resources.
What are some options for people who need access to cash now? Like, let's just say you did get yourself in a situation where you made that that type of investment into a house, but now I've run out of money.
Yeah.
Right. And so there's a lot of different options that people have as far as accessing a line of credit, or what are some things that people can do if they find themselves in a situation where, man, I've run out of money and I have to be able to pay my contractor, or I have to be able to pay for this new windows that are getting delivered.
100%. Like if you have decent credit, right, then you can typically, you know, especially if you have a banking relationship with your bank, you can access, you know, different lines of credit or credit cards to be able to subsidize. Or maybe slightly more abstract answer, if someone is a working professional, is looking to bring additional income into the household, I always tell people, even if you don't know anything about entrepreneurship, there's millions to be made in the middle. And what I mean by that, the whole economy is set up off this premise. There's a buyer, a builder, and a broker. Someone who makes something, someone who wants to buy it, and a person or something in the middle that connects both people. So even if you don't know much about entrepreneurship, you can find a sweet spot to where, hey, look, I know somebody who wants this, right? I know somebody who can make this, and how can I connect both people to be able to extract some income and some resources from that? So I think I would encourage people to look into things like even social media management, right? Or content creation. You can get people on Fiverr to create short reels and clips for everybody. Everybody's into content creation now. Get it done on Fiverr for $20 and then charge the person $500, right? And you don't have to be the creator. So just finding those ways where it's like, how can I be creative in making money so that I don't even have to leverage credit if I don't want to?
How did you get into all this? You're a Black financial advisor, licensed, everything. It's not an easy thing to be.
Yeah. I'll try to give you the short answer. So I grew up, like many people, not knowing about money. And so when I went to college, I got a double major in marketing and economics. I had no intention of leveraging the economics degree for a career. I just wanted to understand money and help my family. I graduated in 2009. If anybody knew what the economy looked like in 2009, there were no marketing jobs available in 2009.
Any jobs.
But in the finance space, because everybody was getting laid off because they caused the crash, they were like, hey, we got some openings over here. I thought it was a job, but it was really 100% commission job, right? So I had to like essentially eat what I killed. But I thought I was about to get a paycheck. 2 weeks roll around, I was like, I didn't get a check. I was like, oh, you don't get a check until you bring in clients. I was like, oh.
There's a no-lose situation for them.
Yeah, so I got in, and then the company I was working for, they told me to do this exercise called Project 200. And basically it's like list out 200 people that you would want to trade paychecks with, people who have a lot of money, people who have this amount of investable assets. And I couldn't think of like 2 people. So I was like, oh, okay, well, it seems like wealth management is not made for people to look like us, but I knew that couldn't be true. So I was like, how can I create a path to where I can educate and serve and meet people where they are? And so I then left that firm and ultimately started my own firm. And then from there, I started a firm that allowed people to realize that wealth can look like them too. And so I didn't focus on the asset side originally. I focused on people who made a decent living and had a little bit of a surplus and could start investing and start building wealth versus focus on people who already had the money. And then from there, that just continued to grow and then ultimately into what I have now with the Melanin Money ecosystem as well.
Tell us about Melanin Money ecosystem in just a second. But first, this guy's investment portfolio, he was just saying he works with people who have little bits to spend. He's outpaced Warren Buffett. I mean, that's why he's getting all of this attention from Forbes and everything. You are the real deal,
Thank you.
Mr.
Which is
Miles.
always important to make sure that.
Yeah.
Yeah, it's a lot of funny
about
business,
that.
especially over the past like 3 years. It's been interesting.
What do you tell people? Like, how do they? There's so many coaches and so many influencers. How do they weed out those that don't have the track record and should not be giving out financial advice?
Yeah, I think it's rooted in due diligence, right? It's like, I mean, the internet is great. Well, the internet is a gift and a curse, right? In a sense that anybody can have a platform, but also anybody can have a platform. So you have to kind of just go behind the covers, you know, and is there proof, right? Have they helped other people? Is there documented results that they've gotten for other people, not just themselves? Because often what you see is the results that they were able to get from themselves is after selling information, taking the money that they got from selling information and then doing the thing that they told everybody else to do.
Right.
So is there some documented track record of them actually getting the results, right? So me, it's all Googleable, it's all verifiable. So when I even thought about like selling my firm, I was like, I don't want to do it because that's the one thing that like keeps me like between like the educators and the experts, right? And not to say that there's anything wrong with educators. I think it's phenomenal. I think it bridges the gap because everybody's not going to be able to hire an advisor right away, but you have to make sure that you're working with somebody who knows what they're doing because there's people who share information. It's like, hey, I find this interesting. I'm just sharing it with my audience.
That's what I do.
Right?
Yeah,
It's
I
like,
just
hey, look,
share information.
I don't know though. The Kanye meme.
Nobody give me no money.
Yeah.
I don't want it.
Hey, I'm doing this. It's working for me. Maybe you should try it, but I'm not, I'm just sharing it, right? Then there's educating. Hey, this worked for me. It might not work for your specific situation, but has worked for me, and you can try it. And then there's advising, where I have a track record of helping several people in different situations get this result, so I can give you specific advice relative to your situation.
And that comes with a lot more responsibility, too.
A lot more responsibility.
Because if something doesn't work,
It's
then,
on you.
it's on you.
It is on you.
Yeah, my clients could sue me if they wanted. Like if I gave them ill-gotten advice and they lost money or something like that, like as a fiduciary, they would have the right to sue me. And in 12 years, I've never had a negative complaint, so I'm grateful.
How much do financial advisors cost? Like, what's the range for people who are listening and that are like, this is something I want to do, but can I afford it?
Yeah, so it depends upon their area of specialty, but it can range anywhere from, let's call it $4,000 to $6,000 a year, upwards to $60,000, depending. And when you get to $60,000, you're talking more like fractional family office, where they're like managing, your accountant and everybody on your financial team. But there are some pretty cost-effective financial advisors, and you can also do project-based, right? So maybe you don't want to hire somebody for the full year, but it's like, hey, I'm about to buy this house. Can you go through an exercise with me to make sure that I got all my ducks in a row? Or hey, I'm about to get married, and me and my spouse are combining our finances for the first time. Can you help us? And they'll just charge like $250 an hour. So I tell people you can almost like date your financial advisor, right? See if they have an hourly rate, and that'll give you some insight. Could you work with them? Because my clients, I'm working with them, probably until they die.
How much does it cost to work with you? And
That's
what
the-
let's
That's the $1 million question, right?
$1 million.
Hopefully.
No. It ranges. It ranges between, on the high end, between like $30,000 to $40,000 a year. But my clients make the money back so quickly. It's not
But
even
you
funny.
have a platform that people can do it monthly.
Oh, for sure. Yes, that's our educational ecosystem. So I have an educational platform that's probably just as good as some advisors, and it's only $99 a month. Right, I have my entire course framework in the platform. We have live classes that we teach, every week. So yeah, for someone who's just getting started, I think that's a great start. Is our educational ecosystem.
Do you have more stuff in, like, let's just say somebody has some money. People do this to me all the time. They'll be like, oh, I saved up $100,000 and I want to do something with it. What should I do? And I'm like, I don't know.
Right.
But when somebody says that, because it's like you could invest in the stock market, you could purchase a property depending on where you are, but I can't tell somebody what they should do. But if somebody came to you and said that, right, what are some things you can do if you have some money saved and you're like, I want to do something with it? Like, what are some different suggestions?
Yeah, I'll give you my bread and butter framework that I tell people. So the first thing I want to do is like, I want to define what freedom looks like for them, because investing doesn't matter, right? Saving money on taxes doesn't matter. What matters is somewhere in your mind, you've identified an ideal lifestyle that you want, right? I want to live here. I want to help these people. I want to travel here. I want to eat this kind of food. So there's a number we can put to that, right? If we actually sat down, well, how many trips do you want to take a year? Where do you want to go? What kind of car do you want to drive? We could back into a number, and that allows us to figure out your freedom number, right? Once we figure out your freedom number, and then when you want to hit that number, that will then kind of narrow or open up the guardrails on the types of investments that make sense, right? So what my tried and true strategy is this. I look at the stock market as my bank account alternative, right? For my non-essential spending. What I mean by that is, for any money that I don't need for day-to-day living or short or immediate expenses, most of my money is going to the stock market. Why? Because if you put it in the right type of account, a brokerage account, you can actually borrow against the value of that account and then leverage that to go buy more assets, right? So you might have heard somebody say, like, when it comes to insurance, but this is for me, it's a little bit more straightforward versus like with the insurance, you got to go through somebody. You got to hope that they design the policy the right way. But with this, you can literally deposit your money in an investment account, immediately have a line of credit, right, of up to 40% of your portfolio value, and then go use that to go buy cash flow producing assets like real estate, right? And then if you're still building up to your freedom number and you don't need that cash flow to live because you're still working, you take that cash flow and you reinvest it back into the portfolio. So now you're able to essentially triple, right, the timeline to being able to build wealth, because you got your portfolio that's already growing at 10 to 20, 30% a year. Then you now have this cash flow producing asset that you bought that's still going to appreciate in value. And then you got the cash flow that you were able to reinvest back into your portfolio. It's now able to grow with your original investment. So that's kind of like the condensed
See, that's a
version
better
of
answer than I could have given anyone. That's why you get paid the big bucks for this.
Since you started and now we've seen so much more interest of blacks in the stock market, I want to know what you think have been the biggest mind shifts. But it's also interesting. I was doing a report a couple of weeks ago. If you look at affluent blacks and affluent whites, both say net worth $750,000. The blacks have the majority of their investing in real estate, and the whites have the majority of their investing in stocks. And a lot of that's just because of how blacks feel about real estate. So I want you to talk a little bit about our mindset and what shifts you've seen and where you'd like to see us go.
And to add on to that, I just want to say I can't remember who it was, but somebody was saying real estate is a waste of money. I don't own a home. I forget who
was it Grant Cardone?
Yeah, it might have been Grant Cardone. He was like, I don't own a home. And I was like, this is weird to me, but okay.
Yeah. Grant Cardone's a little radical.
Yeah, that's a bit radical.
I think that people that look like us, they like the tangibility of real estate, right?
We understand
real
estate.
So it's like I'm literally living in it. It's right here. I can touch it. I can feel it. So it seems more logical to invest. The thing about the stock market is it's highly liquid, and it's the market's kind of emotional, right? Donald Trump, when he was in office, he could tweet something and it can move the market, right? So people feel kind of some type of way about that. It doesn't feel real to them, right? But the reality is, when you invest in the stock market, you're owning a small piece of companies that you shop with every day. All of us probably in here have iPhones. I hope, if there's any Android users, what I'm saying, I don't know, but. Like, these are real companies. And if you can understand that now the best CEOs in the world work for me, right? If Tim Cook does good, if Elon Musk, which he's a little interesting at times, if he does good, at the end of the day, all I have to do is, with no barrier to entry, right, for a few $100s, I can now own a piece of this company, right? Which I think is amazing. And it democratizes wealth building, because there are barriers to entry to real estate. Not that you shouldn't do it, but there might be someone who has to wait 2-3 years to get their stuff together before they can buy that property.
Right.
But you can invest as little as $50 or $100 today.
Right.
Right.
Or you might buy a house and it might take 3 years for you to even start renovating it, and then it costs $1 million times more than what you expected. Sounds personal, but it is.
Real stories.
And then passing that house on to the next generation, not an easy task at all.
Not an easy task at all, right? And so, again, it's not that these things are wrong. They're just, you have to understand what comes with it, right? Like, just like the cost of ownership. People think, oh, I want to get into real estate. I see people talking about flipping houses, or okay, cool. But, like, do you understand the full scope?
Yeah.
Right? So it's not that these things are right or wrong, but if you do want to pass it down, people throw the term generational wealth out very loosely, but you can't create generational wealth if you don't have a generational wealth plan.
Yeah,
right?
You're leaving somebody taxes, you're leaving somebody debt, you're leaving them illiquid. I know in the black community, we're told, our grandparents and everyone were told, when you've made it, you get a house. We have that conditioning. When you made it, you get a house.
That was my grandfather. Save your money, buy a house.
And we
Anything
used
I bought.
we used to be property. So home ownership has a whole very, very special meaning to us. But I'm so excited to see more people getting into stocks.
Yeah.
But tell us how you beat Warren Buffett. I got to hear the story.
It's actually not that hard. Y'all ready for this? The $1 million strategy? Okay, so all I do is this. I call it the Burger King investment strategy, right? So McDonald's puts thousands and hundreds of thousands, if not millions of dollars, in determining where they want to put their next location, right? All Burger King does is they put it across the street from McDonald's, right? It's like, oh, McDonald's already did all the heavy lifting, right? So what I mean by that from an investing standpoint is the biggest companies in the world, like, Vanguard, BlackRock, they have analysts who put in tons of research to figure out how to put these ETFs together, these index funds. And that's just a basket of companies, right? So the way I like to explain it is, if you go to a mall, what's a popular mall in New York? Like a big mall here.
Macy, what's the one that...
We don't really have malls like that.
That's
King's
like
Plaza.
shop stores. Okay.
Shout out to King's Plaza.
So King's Plaza, right? So it has all these stores, I'm assuming. Is there a backstory on King's Plaza?
No, it's just it's in Brooklyn. But
okay.
I feel like New York's not as much of a mall place as New Jersey or something like
That's
that.
fair.
Or maybe Long Island.
But
Long
Penn
Island.
Station, isn't that considered a
Right.
mall?
True.
The 34th Street Macy's.
This is a funny
I'm just gonna
conversation.
stop.
I'm like,
Okay.
Mall. Short Hills Mall is my favorite.
Short
I just
Hills
wanna
Mall?
Put that out there.
Is there a lot of stores in Short Hills Mall?
Yes.
Yeah.
Okay,
we'll go Short Hills
So
Mall.
Short Hills Mall,
Well,
right?
American Dream, that has the most.
American Dream. How many stores are American Dream, roughly?
Ooh, they have like a whole, yeah.
So a lot, probably 500, 600, maybe even more
Okay.
stores, right? Okay, cool. So
We got the image.
So if one of those stores closed down, or two of those stores, or four of those stores closed down, is the whole mall going to close down? No, right?
at all.
That's how an index fund or ETF works, right? If one or two or three or four of the companies don't perform, the index fund is designed to be so diversified with 500 companies, hence the S&P 500, to where it's still going to be able to perform decently. Now, there's pros to that, right? Because it's not going to fail, but also there are some losers, right? That probably drag down the overall performance, which is why it averages like 10 or 11%. So where Warren Buffett or somebody might tell you to just invest in an index fund, that's cool. You'll get your 10, 11%. what I like to do is look inside of it, and it's like, okay, well, of all these 500 companies, what are the top 5 to 10? So then I'll have about 50% of my portfolio owning the index fund for diversity and for diversification. And then for the other 50%, I'm picking the top winners, the Apples, the Microsofts, the Googles, the Teslas. And so now what happens is I'm what you would call overweight in these really, really well-performing companies. And so that helps me get an outsized return. Like, all it means is it helps me beat the market or beat Warren Buffett. And I've been doing that for the past 5 to 6 years.
It's a good time to be overweight.
Yeah. It's probably the only time it's good to be overweight, right?
You know what? It's also about timing too, right? And and when you buy things, so cryptocurrency. That's been back in the news a lot lately.
Back in the news.
And so what is going on? Because people are like, okay, this is going to be a great time.
Yeah.
So I want to hear your thoughts about that, because that's something I've never, like, I bought a little bit of Bitcoin just to watch what was going to happen.
Well, Mark gave us a little bit.
Yeah.
And I gave y'all.
He did.
People giving y'all free.
It was
Bitcoin?
$50.
Oh, okay.
But it's a good way to just kind of like,
test it.
to test it and see what's going on, to watch it go up and down, and down. Because that's also, when you're watching stuff, it is like...
Yeah, kind of nerve-wracking.
Yeah, it's nerve-wracking every single day. So what is about to happen with that?
With Bitcoin. I mean,
or Ethereum, just crypto in general.
Crypto in general. I look at cryptocurrency, and I was talking a little bit about this on the way over here. I look at cryptocurrency still as, an alternative asset, right, that, has a lot of potential. But I think there's still a lot of unknowns. So for me, in my personal portfolio strategy, I only allocate no more than 10% of my portfolio to things that I'm comfortable losing 100% of.
Okay.
Right. So that's venture capital, that's private equity, Bitcoin, anything like from an alternative standpoint. So for me, I don't necessarily know I have a prediction on what I think it's going to do. I think that it's going, if BlackRock approves the ETF and they have a really strong approval rating, I think it's going to go up substantially. It could go up to probably all the way up to 100,000 by 2025. But nobody knows. I'm being honest. Like, I would love to.
It's a Wild West, though. It's like at the beginning.
Yeah.
A lot of people I'm
like
talking
early
to,
internet. Like,
we think it's here to stay, but it's just like when the stock market first started. It's still
a wild, wild west.
Remember, everybody was doing NFTs?
Oh, gosh. Yeah. I remember that. Was it 2021?
That was crazy.
It was a crazy time.
So while people paying $200,000 for digital monkeys,
and those people cashed out.
They cashed out.
They sold those digital monkeys.
Yeah, some people got left holding the bag, as it always goes. But yeah, so I would say, like, have a small percentage of your overall investments and say, you know what? Because I think you still got to get in the game, because you'll be pissed off if, like, Bitcoin does go to 100 and you 100,000, you don't at least own $1,000 worth, right? So whatever you're comfortable losing 100% of, I say invest in Bitcoin.
Maybe our $50 will turn into $5,000.
I'm hoping so. Or if not, we'll call them.
I bought Bitcoin for the first time in 2017, and I held on to 80% of it ever since.
Up and down, and now squeaking back up.
Yeah, every ride.
So we have a lot of entrepreneurs in our audience, and you just did a podcast called "Getting Big Results in Your Business in 2024."
Yeah,
spill it. What do we do?
Yeah, I need that help.
For sure. Okay, so the first thing is, like, again, it goes back to, like, the personal finance, right? Like, what did you do that went really well, right? You have to audit. Sometimes people get so attracted to the shiny ball, like the next big thing. It's like, well, what's working, and can I double and triple down on what's already working? That's the first thing. The second thing is you have to know your numbers, right? Because if you're looking at your business and something that you would like to do or you enjoy to do, but at the same token is not the most profitable, you might have to consider, like, does this make sense for me to focus on right now, right? Versus the thing that has the higher margin and is going to give you, more results, right? Then you have to learn how to hire the right people, right? Like, you have to learn how to hire the right people because most founders are not the best CEOs. Here's why, right? The reason why most founders are not the best CEOs is because and this is myself included, like, ultimately we are visionaries, right? Like, we want to do all the next big frontier. We want to take over the world.
Already on to the next.
Right.
Yeah.
And so a true founder is brand focused, and a CEO is numbers focused, right? And so even if you're still the CEO of your business, you need somebody or some people in your business who can keep you, while you're in the clouds, can keep you rooted, right? And making sure that, okay, this is a great idea, but, like, does this make sense for 2024? Right? And having that dynamic team. I think everybody needs at least 3 players on their team. You need somebody who can fly the plane, which is the visionary and the CEO. Somebody that can take care of the passengers, which makes sure that if you say you sell a fragrance, that somebody orders it in 2 days, they actually get it, so they don't call you a scammer, right? And then somebody who can essentially, so you got taking care of the passengers, flying the plane, and then get more people on the plane, right? Because I don't care how big your business is or how great your product is, if you can't get people on the plane, right? You can't get new customers, then your business is going to go out of business. A hit song is not made, it's marketed, right? So you have to be able to figure out how can I get as much awareness as possible for what I do so that if I have a great product, I can actually sell the thing. And then who is making sure that we are paying attention to what's happening in the world so that our business doesn't become obsolete.
Right.
1.5 million years ago, it might have even been 2 million. I interviewed Bill Gates.
Oh, really?
I was asking him what was the secret to starting a tech company. And he was starting it.
Yeah.
And he said, I don't care what company it is. He's like, find 5 people you trust.
Yeah.
And you do business with them for the rest of your life. He's like, I don't care what's the product, I don't care what's the company. He's like, find 5 people.
Without team, it's really hard. It's really hard.
Yeah, and finding those 5 people is really hard. Things change.
Yeah.
And, especially if it's your friends
Oh,
or
gosh.
family.
Don't hire from proximity. Like, that's a big mistake I made early on. Like, hiring from proximity. Like somebody raises their hand, like, oh, I could help. 9 times out of 10, your business is going to grow. They're not going to grow at the same rate. You got to have that awkward conversation of like, this doesn't make sense anymore. Like, hire the company has a tax ID number. You have a social, right? The company has needs just like you have needs. And so you have to hire for the company's needs, right? And not try to create roles for people because they're your friends or because you care about them. Because it just
Then you have those conversations. You wasn't even qualified for this, but I helped you. Well,
then they feel entitled. We could do a whole episode on that. Yeah, for sure.
Speaking of entrepreneurs who have fragrances and need to smell nice.
Hey,
equity.
Tell us about equity.
Yeah. So when I started Melanin Money, so remember I come from the financial advisory background, right? And so when I started Melanin Money, I was like, I don't want to spend money to create billboards, right? I was like, but I got to figure out some way to spark conversations on building wealth, right? So that started with just what most people do, T-shirts and strong statements. Like, oh, what does it mean to be a melanin millionaire? Or what does it mean to be Black, brilliant, billionaire in the making? If I've ever seen those shirts, that's my brand. And so I was like, this is cool. And it started to kind of take on its own identity. And people thought that was my main thing. I was like, no, I actually have a whole financial firm, right? And so as I continue to build out the product line, I'm just always thinking of ways that will spark conversations of the conversation of building wealth. Oh, what are you wearing? Oh, it's equity. Oh, what's that about? And then it sparks the conversation that this is not just a physical product, and there's a whole financial ecosystem behind it, so that people are now interested and intrigued about building wealth. So that's where the fragrance idea came from.
You know what I wanted to ask you, since you brought up Elon Musk earlier?
Yeah.
And he had tweeted out, DEI must
die. Yeah, I saw that.
Yes. And so I want to talk about the importance of DEI when it comes to corporations and the resistance that so many people have to it.
Yeah, I think the resistance comes from the fact of put it like this. If you have been in power and the world has been designed in a way to cater to you, and now people want what they consider to be their fair share, you're naturally, you just don't want that to happen. I think we even see, what's her name? I think Ariana
Huffington?
No, Simone. She has the Fearless Fund, I think.
Oh, yeah.
You know what I'm talking about?
Yes.
Yeah, she's under attack right now because they're saying that
that fund was only targeting
minorities and women founders, and they feel like that's discrimination. And so it's I
so
feel
ridiculous.
Like it's so crazy, right? I just feel like because of access to information and because people are learning and because we're growing as a community, other communities feel under attack. Oh my gosh, they're getting what's rightfully theirs, and we need to find ways to slow that progress. 400 years of slowing it down wasn't enough, right? And so I think that's where we're seeing a lot of that energy from, which lets you know that we probably are doing better than people give us credit for, because
why
else
so
would they care?
scared?
Exactly.
Yeah.
Why else would they care?
An animal's most dangerous just before it dies. With that question. But the whole DEI, it's very, very complex because you might have a well-meaning CEO,
right,
but he has managers under him who their performance reviews is how much they sold. So it's very, very, very complex stuff. But
so
you're writing your own rules, and I know you have holiday presents. You put together a little bundle for our people.
Yes, absolutely.
Okay.
So
in addition to our equity.
So I wanted to make sure that people could, start the year off right. So, it's the end of the year. You might feel a little bit guilty about your holiday spending.
Oh, wait. Hold up. I do. So tell me.
You feel a little guilty about your holiday spending?
What? A little bit.
No comment.
How do we deal with that?
How about you? How are you feeling about your holiday
You know
spending?
what's so bad is that I was trying to buy gifts today because I've been so busy. I haven't done any. And I say this, and I hate that I've said this to our listeners so much. Do not wait till the last minute. That's the worst thing you can do. And here I am.
Waiting till the last minute.
Waiting till the last minute.
Yeah. Well, a wise man once told me, If you didn't bring it with you, you're not gonna find it here, right? So what I mean by that is like, it's already happened, right? The year's over. There's no need to beat yourself up off of what already's happened. What we can do is create a plan so that next year we don't put ourselves in the same predicament, right? So I wanted to put together a few free resources, absolutely free. One is a personal budgeting guide, right? So that if you're trying to create that cash flow plan for 2024, you want to save more, you want to invest more, now we'll have this resource where you can really evaluate your expenses to determine where your money's going to go. I created the same thing for the business as well. So it's a business forecasting blueprint. So everybody says, I want to make $100,000 or $200,000. All right, well, what's the plan, right? What are your expenses? Where do you think the revenue is going to come from? So I created a whole blueprint that people can leverage to kind of forecast out their business revenue. And I added a dividend stock investing guide. So my top 25 recommendations on dividend stocks. All free.
This is all free. Wait.
All free. Okay.
For our audience.
Let's sign up.
Because we love you.
Absolutely.
And you text the word freebie, FREEBIE, to 704-270-6477. Freebie. And you get all that.
Absolutely.
You get those freebies.
So that's back to something you said earlier in the podcast is like, how do you vet, or maybe you said, how do you vet out people, right? I was like, my whole thing is if you can't get value from somebody's free information, you definitely shouldn't pay them. Right? So, like, if the free information is like, oh, like, I really didn't get. So, like, if you can't get value from that, then you definitely shouldn't pay them.
And also, people have to know that it's work on your end, too.
Oh, for sure.
You know, if you're signing up and paying money for something, go get your money's worth and make sure
100%.
that you're doing what you're supposed to do and going above and beyond. And if you have access to be able to have one-on-one conversations or send in questions or whatever it is, like, make sure you use the information.
Yeah, I'm pretty sure you have people all the time, or you all the time, actually like, what should I do? Or I have this money I want to invest or whatever. Like, have you listened to one episode of Wealthy Wednesdays? Right? Of the 48 episodes? Like, so
48?
Sometimes people don't take advantage of the free stuff out of entitlement or whatever. But, like, take advantage of the free stuff.
Yeah, we have a whole Facebook group.
I know.
Facebook
we have
group.
Wealth Wednesdays. You can't remember those numbers. We are going to say them again. But we're going to put all of his information in Wealth Wednesdays for Entrepreneurs Facebook group.
Absolutely.
So we'll put the number, the freebie, everything, a picture of equity.
Yes. Grab that. Right.
Everything.
It smell good.
Yeah.
I am selling that.
That's not included in the freebie.
That's not included in the freebie, but it smells good. So,
well, all right. Well, thank you so much for joining us. This was an amazing conversation.
thank you for having me.
Thank you, George.
Appreciate
and we
it.
can listen to you on Melanin Money.
Absolutely. So our YouTube channel is Melanin Money. Our Instagram channel is Melanin Money. Of course, you can follow me personally, George Acheampong Jr. You're definitely going to need to put that
You
in the show
definitely got to
notes.
I'll
spell
write
that.
that
You got to
out.
spell that, yeah, because they're not going to
I'm
be able
not
to.
going to start now because she'll make me start giggling.
They're probably gonna misspell that one. But yeah, I'm on social media, YouTube, all that jazz. So yeah.
Well, thank you for being on Wealth Wednesdays on Way Up.
Yes, it's going to help people as we're all trying to reach our goals.
Absolutely. Thank you for having me.
Thank you.